All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for July 2nd, 2022. It's a weekend swing trade framing and looking at our sectors. Here we go. All right, let's start with Chi Wing Chong's RL30 slope, the Z-score of the sectors. Again, so this is, we're looking at Z-scores. And so the idea of the 30 period slope is something like this. So we got some new folks in here tonight. So you take 30 bars and you find the regression line, the RL30. That's the best fit line for all that data. It's the one that minimizes the distance, the error from the regression line. So it's the best single straight line description of that price trend. If that price was perfectly sideways, then the slope line would be zero, be flat, but this one is slightly up. So that angle alpha has a degree. It has a certain steepness. If that price was like this, then that angle would be better. And so we would prefer trend A to trend B. And because it's that much better than B, and B is that much better than zero. So now we can compute that value, that slope value. You know, that's the M is the value in the formula Y equals MX plus B. That gives you the slope value of a line. And so what we want to do is we can compute the slope value every day for the last 180 days. And we can find out what that value is. And then we can find the maximum, the min, the average, and then the standard deviation. And that would let us know something like, +1 and -1 standard deviation. And that would give us something like, in the Army, we would call that a range fan. That would tell you, imagine you had a little indicator, and you could see how that thing varied between the maximum and the minimum. And then you could compute the Z-score of each of these daily lines, and you can take today's slope value, compare it to those last 180 days, compute the Z-score, and then you would know within its performance how good or bad it was relative to its own performance over the last 180 days. And then if you plotted a time series on that, you could see how that slope value was varying through time, and you'd see something like the very smoothed price trend of each 30-day segment going back 180 days. You could then compare the sectors against the broad market itself, and then see the relative strength of the individual component sectors of the S&P against the S&P itself. And by plotting all of that on a Z-score scale and finding the average, this is when the slope is positive, and this is when the slope is negative, you get something like a rapid array of the cycle of sectors and the markets through time on a relative basis. And because these are Z-scores, you know that most of the data falls between +1 and -1. So about 1/3 of the time that data is in that band right there. right? And only 1/6 of the time does it get beyond that. So anything more than plus or minus 1 becomes an abnormal condition. Abnormal compared to itself over the last 180 days. See, how unusual is it compared to its own history? So that's the basic idea, is to find where the strong and weak sectors are. And now what you can see is that the S&P acts, and this thick purple line acts in the middle, and you can see how strongly it attracts most of the other sectors, and it is kind of in the middle and all the way. And the lone exception happens to be energy. And part of that reason is that as war in Ukraine is ebbing and flowing, energy is acting on its own accord because it has been experiencing extraordinarily abnormal price pressure. And you saw a tremendous rise in the price of oil, and then a decay in the energy sector as prices reduced a little bit, and we're coming under pressure for their excess profits. And now there's sort of more global risk. And XLE has had extraordinary pressure. Now, one of the ways to use this is to know which sector, like back here when the market was suffering, but energy investments were really working. You could gain an advantage by emphasizing your exposure to energy. When it gets past +1, though, you got to be really careful, because now you are in abnormal conditions, and it's hard for an entire sector to remain up there. So when that thing rolled over here, there was an indication that perhaps the abnormal expectations were over, and there was a chance of a reversion to the mean. So when you see those kind of turning points, you can act accordingly to preserve whatever profits you made on the way up. Well, not only do things exceed expectations in abnormal, but when they come back to the mean, it's not unusual to see them overshoot that. So you get this oscillating effect, not just in energy, but in all these. And now you see energy down here at -3.5 sigma. That's how much has come out of the energy sector on a price basis. 3.5 standard deviations of adverse move. That's a 5.5 sigma move to the downside, which is kind of extraordinary. So if you take a look at all of the energy stocks, you'll see exactly that kind of roller coaster ride. Well, for short-term traders, this is a godsend. You love trading on the short side in that kind of price decline, because of the increased volatility in the short term is our friend. So you like to know that. So let's see where we are now. So this is our zero line, and we're seeing pain and suffering here in the S&P on this latest leg down, although it did show signs in the last 3 days of making some kind of stability. Tech has been the strongest relative, finance, and then energy's been getting slaughtered, and then the steel companies and the other materials have been suffering as well. So I'm, as a catfish, as a bottom feeder, I'm always interested in deep value. In addition to trading things on the short side on the way down, I also like to see where is the point of maximum disgust, and then where does that become neglect? Much like finance got disgusting here, and then this is evidence of neglect, and now this is an opportunity for value as the rest of the market began to recover. So what this chart shows us then is the relationship between the S&P and then 3 sectors that tend to cycle according to business conditions, business cycle conditions, quite a bit. And technology, which is sort of the favorite son of the growth crowd, that when the market is doing well, It's not unusual to see tech leading the way to the upside, and even in the first bits of decay, showing some signs of resilience. So I usually think of XLK, the tech sector, as the engine that's pulling the market up the hill towards growth creation. And right. And then I look at finance, materials, and energy as three sectors that can oscillate according to their own battle rhythm. Sometimes one is strong, sometimes the other is strong. Like here, we saw energy was weak, materials were strong. Here we see finance. I'm sorry, that was finance and material. Finance weak, materials strong. Here we see both finance and materials strong. Here we see finance weak, materials strong. So you get this oscillation among those three, and then energy really diverting from the pack and then becoming extraordinarily weak. So it's not unusual to see those three moving out of cycle with respect to each other, conditioned by the S&P, but then also during good times to see tech taking the lead to the upside. So kind of use this as a market segment, market cycling radar screen in that sense. What makes materials so useful is that it is such a small segment of the S&P that a little bit of price action in there can really move it around a lot, because there's not as many companies as there are in market cap as there are in tech. So that's where, so having said that, this is how I'm reading where we are now, is this initial recovery off the bottom has suffered over the last 30 days. The last 3 days have given us a little bit of hope for redemption, but it's really in a critical state as it comes to -1. So that puts this in a compounded critical state where a move back to 0 and then +1 would be seen as a favorable, almost like a Kata 2 condition with higher lows. But at the same time, if it can't hold the stability of the last 3 days, a return to pain and suffering on the next leg down in the market would not be unusual. So that makes this a compounded critical state, perfect for short-term traders. The fact that we're in bearish normal and it's at a critical turning point where it's radioactive is really an important moment. It would not be surprising to see tech lead the way. It would not be surprising to see energy begin to stabilize and recover. So I'll be watching for that. And we'll be looking to see who the next, either the leaders up or the leaders down might be. This is the same concept, only now what we're doing is taking a slightly different approach. And what we're looking at is XLY is the consumer discretionary. This one happens to have, I think it's Amazon, Home Depot, and Tesla in it. And then XLP is all the staples. That's kind of your Walmarts and things like that. And we might think of discretionary as more growth oriented and staples as a defensive play. And so we're taking a look at these two broad market conditions. When XLP is greater than XLY, we see how it acts, and the market begins to roll over here, and then the market, and then all of the growth oriented guys are getting slaughtered. But on a relative basis, the staples are able to hold on to their value as conservative plays a little bit longer, and then they are slower to decline. Like they don't get back to the 0 line until here, their long-term average, while the market and the growth guys got murdered down to -2. But this is where the market began to stabilize, and then money began to flow back into the market and then into XLY. And then that began to rise as P began to fall. And so this was a growth portion of the market cycle, when the market and discretionary began to accelerate, while XLP was slow to recover. People were chasing the growth. But then when the market peaks and this rolls over, now you can see that that's a time when XLP comes back into its own, when people try to hold, they want that conservative gains, while XLY is threatening to roll over. So once again, we're right at this crucial moment at Z-1, which is the boundary between normal and abnormal, that if the S&P fails here, it wouldn't be surprising to see that the gains that were made in Y get sacrificed to the gods, and then that begins to fail while XLP continues to get back to normal. So this is another piece of evidence that supports the hypothesis that we are at a really important turning point, a critical state in market condition here. You saw me talk about that last night on the nightly strategy. So that's where we are in terms of the sector. So really good work from Chi-Wing Chong, and really grateful to him for sharing this out. Okay. Any questions on that? Let me know in chat if you found that to be helpful. Otherwise, moving on. Okay, so now we're going to look at a series of swing charts from Ken H. Many thanks, Ken, for the help. So first one we're looking at is XOP, and we're looking at weekly, daily, and 65-minute charts. So that gives them and gives us the multi-time frame lens. And we're looking at, on the weekly, these rising lows up until this point where the collapse happened harsh. So when support fails, that next move is massive and painful. That was the break at 140, which is right here. And you can see that this is where you would expect support to be held, and it didn't. And when support breaks, you get a massive collapse. That's minus 15% in 5 days. That's this move. So now when we zoom in on the tactical, this break right here is that break. That 140 is this 140, which is also this 140 right here. Notice where it hits the PSAR on the weekly. Now, if this is going to continue its little upward gains, you would expect that. Critical state, big collapse. So when weekly support collapses, wow. When weekly support collapses, look out below. And that look out below looks like this. Minus 15%. And it was already summer into the fall, hit the PSAR on the daily at 157. So there was already an alert for tactical traders here that perhaps this move, which was a Kata 2, is over, and that you really need to change your mind. So here's leg 1, and that's leg 2. Now the recovery comes back halfway from that collapse. It collapses to here, comes back about halfway, and now has failed again and stabilized right exactly there. And there's your daily range, right at a crucial support level on the daily, which at 121 is right here. which is just above that little peak. So if this collapses, we're entering a new world of pain down into this region from about 115 to about 95. That's another $20 drop or a 20% drop in oil exploration. This is that energy collapse when we saw that last one, when energy had peaked and dropped all the way down 3 sigma. That's what a 5 sigma adverse move looks like. So that caught a lot of people by surprise. So at this price level, if that fails, then 95 is in play. Halfway would be there. Critical state on the weekly, critical state on the daily, because it held support, moved from 120 to 135, which is plus 10%, and then instantly failed over the next 3 days. Psych. And finished right here. So crucial support level at about 118 and some change. So what we had in the last hours of Friday was this little recovery back to the PSAR. So now, perfect critical state. If that holds, we're not allowed to be surprised if it moves to 130, because that's what it did last time. But if this fails, look out below, because there's nothing on the daily and nothing on the weekly to stop it. This is the speculative oil exploration portion of the energy sector. So there's no support in here whatsoever until it gets to here. And then if that breaks, to get to there. So huge critical state to the downside. And if you can start getting short at 120, by the time it breaches 118, all you're doing is getting your risk out and maybe adding the second position. So that's a great trade to the downside. To the upside, you got 1, 2, 3, 4 units of reward. 1, 2, 3, 4, just to get back to the statistical peak, the resistance here. Now, if that works and gets through here, then I would say probably 135 and then 140 back to the 10-day high is in play. So here's your 5-day high, here's your 10-day high, and that's the value ladder that it has to climb as it's staring into the abyss. So this is about as perfect of an example of a multi-time frame, multi-lens analysis, and the idea of a compounded critical state. Compounded critical state, as you can imagine, because you have the combination of location. So just on the basis of where the price is located, with our rational mind, we can see why that is critical. And then because of the expanded volatility, you can see how volatile that has become, going from here to here in a matter of 3 weeks, and from here to here in 15 days, and from here to here in 10 days, and from here to here in 5 days. That is expanded volatility. So, emotions are running wild, and there's the rational location that makes this a perfect critical state. And there's just enough information here to say that there's some people that bought it on Friday and were willing to hold it over a 3-day weekend on the chance that they can get a 4-to-1 and an 8-to-1 trade to the upside with some of their risk capital. And then that may also attract the short side traders who want to take that opportunity to get short at a better price here than here. So since we don't have a directional bias on this, we're just looking for critical states. This is a perfect place to be long or short, waiting for Tuesday to follow the breakout. Check or hold. So the last 20 minutes have probably been the best single lesson on compounded critical state and hybrid trading that you could imagine. And so very grateful to Ken H. for providing the charts to let me talk us through this. You should listen to that until it's obvious. Cliff Natural Resources, even better, if that's even possible. From 34 to 15, that's minus 60%. And all the steel companies are like that. So notice that on the weekly, you had this. And this is where it was supposed to roll over, just like it did twice. Yeah, this is, all of these are, please notice the chart, weekly, daily, 65-minute. Standard practice. Now, notice that this price level here is where this was supposed to fail. This is where it was supposed to get and then come back to the midpoint, just like it did here, just like it did here, just like it did here. Just say, oh no, it didn't. It went higher. So it moved an entire chunk. It moved whatever that chunk is. It moved that chunk to the upside. Peaked. It could not go any higher, and then came back down to see if that was going to provide, if what was once resistance would now be support. That put it at a critical state right here. And the answer is nope. And then it gets down to here, where what was once support, is that still support? And the answer is nope. So this was at 18. Is that going to act as support and let it get back to here? Nope. It goes from 18 to 15, which is minus 15%. Maybe, and that's over the last 10 days and 5 days. Now, notice when those support levels fail, collapsing dragon, that's why we love the collapsing dragon. Comes back up to a support level. Uh-oh. What do we call the entry in here? Kata 2, because you have lower highs and then a crossing of the dragon and a taking out of the PSAR. So you're short right there with a risk box to the top of the dragon. And your target is here. And now when the belly of the dragon and then the belly of the RL10 break, you get a rapid sell-off and a really rapid sell-off. This one comes here, it couldn't hold, it sells off. And now it broke back through. So we exactly have a Kata 2 that gave us some recovery on Friday. And now we're exactly in no man's land. And now we're looking at a critical state. Once more, if this thing breaks to the upside, then we could see how it could get to 1650 pretty easily. And if that's our risk, you get 1, 2, almost 3 to 1, just to get back to the previous resistance level. That's just the tactical trade. If that doesn't stop it, then you could see another leg up to 17.25, 4, 5, 6, just to the 5-day high. And if that doesn't stop it, it could get to the 10-day high with a couple more. So there's a 8 to 1 possible trade to the upside coming out of our small risk box. But if that fails coming down it will then test this support level. And if that fails, you get 1, 2, 3. And if that fails, look out below, because that's really going to collapse. So in this tiny little region right here, you have a nugget of value in that little black box right there. A perfect little risk box that's ready to go large or large, and we just don't know what it's going to do. Critical state. So you've got to learn to look at those charts instantly and see that how that's working. And so that's why these turning points in the RL10 are really crucial. And then these high and low limits on the 5-day and then the 10-day are so crucial. Here's your 10-day low and your 5-day low right here. So that price at 14.75 is immensely important. So this is just a tactical trade down to that level. It doesn't become a runaway freight train until that gets breached. Now, the good news is that we could already be short when it falls out of that risk box here, and we could be short when it breaks the belly of the dragon, and we could be short when it breaks the belly of the RL10. I want you to notice that the statistical turning point of price is where the RL10 turns, not where the bottom tail of the extreme price movement was. So we use that as our trigger for the alert to the downside. So we can already start getting short here. And then if price does come down and breaches this price level, then we've already made bank on this piece. And then the real painful selling begins. So the turning point of the RL10 gives us a chance to get our position in before the actual extreme low of the swing occurs. And it doesn't seem like that's all important, except you'd rather be short here instead of waiting to be short here, so that while it's failing and it breaches, now you can get your risk out, no lose plus dinner for two, while the people who are waiting for it to breach that are just starting to get short. So you get to front run that a little bit. The same is true if you get short when the dragon belly is breached or the RL10. I am really a fan of the RL10 breachings because those are the outside limits. And then you notice that the dragon is always turns sooner because he's a little bit slower. And oh, by the way, this works on every time frame. Notice that when this price here gets breached on the weekly, that's also where the fall turned to winter. So you could be short at about 18 bucks instead of waiting for this breach to occur. Well, I don't want to get short until it makes a new low, which means that you miss the move from 18 to 16, which is, that's an 11% improvement by being able to get short here. Instead of waiting for the lower low. You'd rather capture this and then get the second leg down when it breaks below there. Same thing over here. Notice that in this case, the RL10 and the price breach was the same. Okay, fine. That's good. I'll take either one of those. Here, you could be short when this gets breached instead of waiting for that. So most of the time, you're going to see that there's some final exaggerated sell-off, which then quickly corrects. And then the statistical low of that move is defined by the RL10. And then this is the excess noise. And now when this breaches, we want to be short here and not waiting for this. And that works on all the time frames. So you notice the difference between here and here. Between here and here. check or hold. Works the same way on the upside too. So this price action was the anomaly. So when you get this rollover, even though the two high prices were the same, you already knew that when this rolled over here, that it was making lower highs. And so you were not surprised by that move there, right? So when you see that move and this move, you can discount the fact that it made identical highs. You would say, oh, that was all in one bar. It ran up and ran down in the same week. So you can discount that as noise. This is the real move. The peak of the real moves are here. In the same way that the lows are getting a little lower. And that is when you connect those dots, that's your downward trend. Now, when that PSAR breaks, that's where you expected it to fail. It didn't. It broke above that. Oh, awesome. It broke above this one. Awesome. It broke above this one. Awesome. And then when it finally clears the final price, now you get all the rest of the strap hangers who say, oh, now that it's cleared the previous peak, we can begin to buy it. Yeah, but we were able to buy it in here and get the first leg up and then get to enjoy the second leg. And then when the RL10 rolls over, okay, take half of it. So that's your lesson on the difference between extreme prices and the RL10 turning points. Crucial lesson. Again, you can see that one here. Notice that when the RL10 breaks, and notice that the RL10 always connects to the PSAR because math. So this is where this was supposed to resume and get back to the top of the dragon or the top of the RL10 if this channel were to hold. It didn't. So you get the collapsing dragon, and now all of a sudden down she goes. And the size of this move is the size of that move plus a little bit. So this is still in very dangerous territory. The only redeeming quality of this thing in Cliff is the fact that you have this downward move and you get this kata 2 to finish strongly. So there's a possibility of this upward tactical move to here, to here, to here, to here, and those are all measured moves. We're not allowed to be surprised if it climbs that wall of fear. We're also not allowed to be surprised if it fails sharply. But 15 is the killer. Because if that fails, then the entire support structure of all of this move, all of these moves in the choppy area, plus the extraordinary move, all of that is gone. And now look out below. So Cliff is very interesting. Compounded critical state. Alcoa, also a metal. We could be talking about the same symbol, couldn't we? Yeah, only Cliff moves farther and faster because it's a smaller cap. Alcoa gets all the press. Hey, there's one I just want to remind you of. When you see that little formation, notice how the RL10 takes its time and makes those turns before it goes up. Here's one where the reversal was so sharp that the RL10 barely budged and then immediately resumed. That's a really strong upward play. In the same way that this one, it didn't even roll up and then roll down where that would normally be a collapsing dragon. That one barely nudged and then failed fast, which is why that's a big move to the downside. check or hold. So here was the collapsing dragon at 48. That's a 10% move down to here. And here was that little final recovery on Friday, the little hourly breakout bar to get back to 50. Really, it's got to get through 46, 48, 50. So you got these 3 legs up, almost 4 legs up. It would take quite a move to break above 52. But if it does, look out above, because these are going to barely act as resistance. But that's a lot of resistance right there. So you got to play the tactical move, these little measured moves inside here. That amount of gain is plenty based on the size of the risk you got to take. So that's 4 to 1 in that space. But all of that is noise. That's all noise until it can break through this resistance and then start getting up into the irrational exuberance. Unlikely. It could happen. More worried about the downside move. So if this breaks, the next support is 35. So you got a $10 range in here. So, and you're looking at about a $2 risk against a $10 gain. That's 5 to 1 to the downside. And just $2 move up to, call it 52, is about 4 to 1. So you have a nice move in either direction in Alcoa, makes it a classic tradable. And intraday, that's really only a 0.5 risk. You don't even need the full $2 if you're trading that intraday, because it's such a great trader intraday. That's why you always see it. Yes, Nicole. Yeah, the price reverses so quickly that it barely budges. When you get a lot of intraday volatility like this, or you get a 1 bar volatility, that doesn't have enough power to really change the RL10, because the RL10 is based off of where the closing prices are. So the close on this one was here. Even though the open was here, it went from close to close. And all of those prices made the RL10 continue to drift. Whereas you see the extremes on the price bars, the RL10 is concerned about the underlying trend because math. Okay, so Alcoa, critical state, ready to go large either direction for all those reasons, just like Cliff. Good frame. They're really going to jump this week. Walgreens, just cannot, they just can't get out of their own way, and stuck way down here, has left all of this stuff behind, just failing as much as it can. The final washout and 1 strong move to the upside, that doesn't make a trend, but it does allow for the potential to come up to about 40. So if you can get a small risk here, it has to test and get through here. Then it has a chance to close that gap. Then it has a chance to get to resistance in here. And then back to the 5-day high. Oh, so that's a pretty good 1-day move. Now, this really explains why you're interested in collapses like this. That was a Godzilla trade. It opened, sold off, and then had a strong recovery. When that turns, you get a 1, 2, 3 entry. That's a nice 1-day trade for 3 hours, from 37.70 to 38.70. That's a 3% move within 3 hours. And that's on hourly charts or 65-minute charts. If you're trading on the 3s or the 5s, that's a beautiful intraday trade with no overnight risk. But you got to know that it's in the Godzilla setup condition in order to make that a low risk move. That's why you pay attention. Verizon. setting up for a kata 2. If it can just get through 51.46, once it gets above that, off it goes. That was all one day. So there's no resistance at all until it gets up to 54. So you're looking at a small risk box, and then 1, 2, 3. That's really good. And then if it fails, it'll get to here, then here, then here pretty fast, in the same way that it climbed here. We're hoping it climbs, but if it fails out of there, it gets to 50 and then to 48 pretty fast. So this is a nice one. Extremely volatile. Good find. McDonald's, kata 2. There's your SSC. There's a kata 2. There's a kata 2. Here's another kata 2. And now it's testing this. This is either going to fail back to here. And if that fails out of here, down to here. So there's 3 legs down. But then the move to the upside doesn't have much resistance above. And this could be that safe haven with a return to 270. That's a pretty strong recovery off that bottom while everything else was suffering. McDonald's is making money. Low cost nutrition. Hate to say the word nutrition in the same tone, but that's pretty compelling. That's the other end of the frames. Coke, same thing. McDonald's and Coke were the two in the Dow that really distinguished themselves. Here was the question mark. It resolved to the upside. It cleared this hump. It's clearing that hump. It made it through. Now it's just got to get through 64.50. That's this. And then this is 66 and then 67 are both in range. And if it gets above 67, who's going to argue against it? This is why you care about kata 2 on that time frame. That's a really tradable move. That's a 10% move just from here to here. That's plus 10% in 5 days. So that's what a fireworks looks like. McDonald's and Coke and Tesla. This one's tricky. Strong support at 650, just like it had over there. This violation of 800 smashed a lot of people. Like it got to 650. Oh, it's back to normal. It's back to 800. Psych, right down to 650. And now it went to 750 and then is back down to 650. So lower highs. Once again, you can see the difference between excess price and the reality of RL10s. Like this one, it didn't take long to show why that was a strong move down, despite the fact that there was that spike of a couple weeks up past 1200. That little signal there was crucial. Collapsing dragon, downside. Collapsing dragon, downside. If this rolls over again, if it goes below about 630, big collapse. It has to get above 690, call it 700 to have a fighting chance to get up into here. That would be an extraordinary move, that next leg up. but you can feel how diminished this is already. 700 is strong resistance to get through. So any break below about 665 should be punishing that. That's why this is the most important stock in the world right now. That's 700 barrier. And then it's 700 to 750. So you got $50 of gains to play inside there. And we're using about a $6 intraday R10 risk. So that gives us a 10-to-1 inside those places. That's why it's such a great intraday trader. But boy, this is at a crucial state. Up, down, up, down, up, tiny little risk box. Is it going to come to 750? Is it going to collapse below 650? So that's $100 range. And right at the key state of 700. So that's a $10 risk. Intraday, I've been using 6. So this is 10. 1, 2 to the upside, 1, 2 to the downside. And then if it can get through 700, let's say 720, then 750. It falls below 630. Look out below. I didn't see anything on Tesla bankruptcy, but their price to sales ratio has always been astronomical. You're always betting on future as opposed to earnings on that one. ITB, home construction. So take a look at Pulte Homes, Ken H. That had a really strong move on Friday. It was an intraday trade for me. You love this Kata 2. I love the emerging dragon breakout. And then it could get through that pretty quick. Has a micro resistance here around 57 en route to 60. I really like that one. And then based on the strength in Pulte, I would not be surprised that this was that this is where the price belongs, and that this was collecting all of the stops and now the inventory for shares. And now they just want to get it from 54 back to 60, which is a 10% move. And we'd be happy to be on that ride. So that looks like a good short-term swing. But when it gets to 60, there's a really important structural question about, can it get up to 70? But this still feels like you're on the correct side of value, and it's a return to that mean. All right, here's Humana Healthcare. You can see how strong the trading range has been. This little Kata 2 is strong. So that breakout above 460 was a good thing. And now it is free and clear. It has really broken well out of that whole trading range. That's where it was supposed to fail, and it didn't. So 460 is strong support. Here's the daily range, and here's the hourly range. So, I mean, as long as it breaks out to the upside, I'm happy with that. There's no resistance overhead. And we've seen that reinforced with strong moves in the healthcare real estate guys, ARE and Peak, which we've been trading intraday quite a bit since they came out of their Godzilla moves. They've been really good the good news for us intraday. So I like Humana there. Ulta Beauty Inc. caught a 2. Notice how the the turning points in the RL10 helps us make sense of all this wild oscillating noise. Those give you some real clarity about where the support levels are. That 340 is this 340. That 360 is not even on this chart. It comes from way back here. 380 feels really important. When that failed, that alerted to this. So if this can hold, then this feels good. Then it has to get above 400. So you have a tactical trade from 380, 383 to 400, which is about, call it $20 from 380 to 400, 410. That's nice. Yeah. So if this fails, that's not going to stop it. This is all gap. So it runs to 350 pretty fast. So I like this on the downside more, to be honest. When this collapses, it collapses hard. So that's a value trade. This is a fear trade. So I would really love the short side on that one. I guess I could play the tactical upside, but if that starts to fail, be all over that one. A beauty product. I mean, for crying out loud. War in Ukraine. Don't invest in beauty products in wartime. Important test, kind of a COTA 2 support level in the Qs. So it's had 2 legs. This sold off and tried to hold support, fought its way back up into support these last 3 days. So now this is the test. Can this hold? Is that bottom the same as this? If so, if that's solid and that's solid, then this breakout is a COTA 2 that gets here in a hurry. That's going to be the challenge. And if that's strong, that could be strong enough to pull the market up. And then this is all gap, and then it could get to here. So this is the promise of tech. Can it be the savior? Be ready for that. So really good work, Ken H. Really thankful for your effort in putting those together. A wide range of symbols. You have tech companies, tech sectors, real estate, home builders, retailers, energy, in both directions, and illustrates a lot of really important concepts for our hybrid trading here. So many thanks. There was a problem last Thursday with the cloud recording. It did not. I cannot recover the coaching of the symbols from Thursday night. So I'm going to re-record that. As painful as that is, I'm going to re-record that now. So you're welcome to listen in as I go through the coaching session from Thursday night. A couple guys that we're looking for the feedback. So, feel free to hang in if you want. Otherwise, I'm going to shift gears and move to kind of a rapid coaching session. So. So when you go to Campfire, if you hit the lobby, you can see the primary, some swing trading, and not much work in there. We're doing most of our work inside here. I keep that just for the kind of the archives. It's just better that way. And but if you go to files and transcripts, you can go find the each of those days and the little thumbnail. So I'm going to go to Thursday. So I'm just going to Thursday and popped open all of the charts there. So those are the ones I'm working on. All right, this looks like Tesla. So we're looking at Tesla 1 minute. This little rollover is a collapsing dragon intraday. It's, the PSAR is already pointing down. So that's an easy short risk box there. This was confirmation that was failing. So he puts the second one on cover. Could have been short again here. It waits for this one short. He gets the second one on so fast that becomes the entire position as a scratch. Waits for the PSAR flip. Breakout, gets paid. This was where this did not fail. This little uptick that holds support. This is really crucial. This little leg one failure to fail is information. So that's where you want your re-entry. This would be a good second position. So there was that leg. Now when I come back over here and say, that breakout was real strong confirmation. So as this rolls over, the least surprising move would be the first move past strong support comes back and gets tested, and maybe it'll do that, but you wouldn't be surprised by a move from here to there. So since you're already long one, that's a great exit to capture 1.4. Total deal of the day 4. Nice work. This is Jack. Recognize the style. This is Tesla from that same morning. And let's see what minutes is he on here. He's on Tesla on the 3s. So here's the opening. That was the close. Here's the opening. So there's this large gap down. He sees it open. It runs all the way up to the edge of the PSAR, fails back down. When it leaves the Z2, he gets short. It ran all the way down here and then all the way back up for 0.2. Rolled up, hit the PSAR and failed. He lets it come out of the PSAR. And now this is almost like a collapsing dragon right here. Not almost like it is. And this is another collapsing. Notice how quickly that rolled over. This is really strong confirmation of the downside. So he gets 0.2 here. He gave back some, but that happened pretty fast. The trend, this downward trend is never broken. So when that rolls over, he gets this, stays with it, gets paid 0.65. Here's that same quick sell off again. He could be as short here or here. That's still pretty good. I think he gave back way too much on this one. On the third leg down, I'd like to get paid a little more. But then he gets the SSC. Here's the turning point, crosses the baby dragon, enters the dragon, leaves the dragon, hits the PSAR, PSAR box, long, and it got past the Z3 pinch and recovers. So he couldn't wait to get out of that one. Nicely played. Really good work. And this shows just some of that intraday volatility and, And if you look at it over a long period of time, hey, nothing to see here. Yeah, except that intraday volatility is a reliable trade when you can have a $6 risk box on it, which is only 1% after all. Nice work from Jack. Here he's doing, this is the Aussie, no, I'm sorry, Alcoa on the threes. Here's the three opening, the OR3, opening range 3. When that collapses, collapsing dragon takes the far side of the dragon as the exit, captures 1.16. Could have maybe gotten it here, but that's a pretty good entry. Good fractional loss, good re-entry, got paid. PSAR flip box, got paid. Here's where it just turned to spring. We could have had that one, or for spring turn to summer. I don't know that's a bad exit. I mean, I don't mind getting paid, but when that doesn't fail back down here and you have the whole river turning, this was kind of a key price level. We could re-enter there. So we'll take 2. Devon Energy on the threes. Big gap down. This could have been a 1, 2, 3 entry. He waits for the standard PSAR flip box. Why not? I would like to see that here. Then this becomes a half an hour loss. Then that's a good re-entry. I think we gave back a lot on that one, but that's still okay. That covers at least this one. But if you can get the entry here, and that's only 0.5, then this feels pretty good. Then it's actually easier to re-enter and you'd get paid on that one. Here's where the PSAR flip box is. That's your short. So PSAR flip. That's your short. That's still pretty good. This RL10 belly comes over here. That's your second position. So leg 1, leg 2. This is such a great exit. When you see this thing blast through the Z3 like that, this is all gift. It pushes Z3 to the bottom and starts to roll back up. Love it. Take it. Here's a PSAR flip. We could be long here with a stop there and get all of that. Got a little too choppy inside here. This short was not called for. Oh no, okay. I think he went long here and then covered here, so the colors are wrong. I was gonna say that's not a short. That's a reasonable effort on the re-entry and a good scratch to get out of it. So we'll take 2 and learn from this as the second position. When you see summer goes to fall and then fall turns to winter at the same price where this is all collapsing, that's a low risk entry. That is a great exit. Really, really happy on that one. Paul on Devon. This is on the 5s. The start of his trade here. PSAR flip box. We might have gotten a little earlier, but that's pretty good. We got paid here. I like the re-entry effort. I think we should be short here, exit here instead of here. That's a great short. And it got past Z3. So I love the exit there. Positive day. Good job. Tesla with Paul. The start of his trading day was here. On this break, this is that formation, this little quick fail. See that RL10? it gets to here and then immediately fails again because there was not enough price action here to make the RL10 reverse. So it barely budges the needle. So this sharp down, flat, sharp down, that means we could be short right there. And we would not lose money on that one. This is a great PSAR flip box entry. Got paid. What a nice COTA 2 re-entry. Got paid. This would have been tempting here as a, if it holds here, now you have a COTA 2 and a breakout. And then if it gets above all of this, it really goes. It didn't, but it could have. So that's nice 2.5 from Paul. Nice work there. This is Tim. Overnight trade in the micro S&P. Let's see, where's his start trade? Oh, he's off the desk here in the middle. Yeah, all right. So this was, let's see. So he's on the threes. S&P E-mini. Good breakout effort across in the VWAP. Good scratch. I like the short. That just, you got hit quick. Good re-entry. Got paid. I think that's pretty good right there. We should at least scratch that. Here's your PSAR flip. Perfect. And then this is where our normal re-entry would be. You could add a second position when it crosses the VWAP. You could add a second position when it crosses here, a third position, a fourth position there. So, yep. This would be a COTA 2. If he's on the trade, this would be all COTA 2, especially when it's above the VWAP, which is rising. That is a huge, quick gain, and you would want to bank that. Great short. Great PSAR flip. So now he's getting paid on these little intraday adjustments. So he's getting paid. This is the one that hurts. Got a little maybe aggressive, but that's about all there was. I think this is the one maybe we can get short again in here to turn this into a positive day. But pretty good work. I was really happy to see that. That was good stuff. Luke on the 5-minute Aussie. Z3 pinch. Here's the breakdown. This is like a fake one go to. So basically scratch, picks it up again short. It got beyond Z3 and gave all the way back to here. So let's get paid a little bit. We got paid a little bit. That's okay. Good scratch, good short on the PSAR flip. This is one where we gave back too much. There's the PSAR flip. There's the entry. This could have been, when you take that Z3 and come across, that's a second position. Dragon horns should be exiting here. Even if you got just the one position on, that's the trade we want right there. The PSAR flip box, 2 legs up, gets well beyond the previous excursion. That's all you're going to get in a currency, right? On those 5 minutes. That's an hourly move. That's an extreme 1, 2, and exit. And then you're not suffering through all of this crap. But still, 4R, we'll take 4. This was Ed. He's trading U.S. Steel. Here was the gap. We could have been short here. Should be short here, because here's our 20-cent MMRB. It's already 20 cents off the top after a big gap. So we could be short here with a risk box here. Then we get paid on this. Instead of getting short here and getting paid there, we could have 1R. Let's see. So that short, quick scratch. Try this long was slow. This PSAR flip should be long here and then get paid there instead of micro loss. Great kata 2. Could have been a second position when that didn't fail further. This was your perfect exit. That was your exit. This is where the short could be. Still, we'll take 1.5. Wojcik with the WMB3. We're starting trading here. Sideways quiet channel underneath the VWAP. Here's a peak. Here's a lower peak. We should be short here. That's still pretty good. I think we gave back too much. Great stop and reverse. Got paid. Chop, chop, chop. These last two kind of choppy. Got paid. And then stuck around too long. When that doesn't fail right away and all of this is holding, you're definitely in the chop now. So those last couple gave away the goodness of the day. His excursions in Devon. This little PSAR flip, we should be long here and exiting here on one trade. And then PSAR flip right here. We should be short here. Oh. When you get that kind of, we should be out here. So we should have that trade. And then in the elbow of the dragon here, that little breakout PSAR flip box long here. Here's where the market open was. That's a great short. The re-entry should be here instead of here. We should get paid on this. Great PSAR flip. We should have that. Oh, man. And then a kata 2. Oof. Gap down, rolls over. That right there, you got to kill that trade right there. Look at big gap down. Recovers. It can't even get to the dragon and then makes a new low of the day. Smash that. And then take this exit. Smash that. Great exit. Stop missing those. Good short and scratch. Good long and scratch. Great short. Smashed it. This is PSAR flip. That's a second position. Then that's a good exit. And then now we got that one perfectly. I'd be trying to get short either there or here, I think, and would have scratched out. Another PSAR flip short. We can live with that. And that's not even getting this one or that one. My brother, standard short. Here's where the RL10 crosses the baby dragon, so he covers for 0.8. That's his signal for long. That's the confirmation of the trade. So you could actually take a second position there or here, but he got it here. And perfect exit on the crossover of the RL10 over the baby dragon for 5.5 plus 0.8 and 0.6 for 7. Phew. Happy, happy, joy, joy. PBW clean energy, very liquid, trades smoothly, oscillates like an ETF, beauty all day. Amazon in a collapse, short. Here's that little pattern again. Notice how the RL10 immediately fails. That's your crush it. Gets paid for 2.8. PSAR flip, gets long. It doesn't work. Scratch. Tries again. Scratch. Tries again. It works. Now it clears the hump. Second position. Perfect exit. 8. Makes it look so easy. Tesla. 1 minute. Short in the little rollover. This is second position was late, could have actually been there. Here's again that little, doesn't even get through the dragon and fails, so you could actually be right there. For being honest, you could be right there. Now, because he has one on already, maybe he doesn't want doubling up, but I just say go for it. Why not? The great exit. PSAR flip should be short here. That's a good second position. Once again, notice that this little price action here didn't even make the RL10 budge. So he gets short, ends up scratching, false start. This is the reentry. I think we already saw this one before. Yep, that was the first one. All right, so that was the that was playing catch up from the Thursday. I'll probably pull those out and add that back to the Thursday. I'm going to leave that on here for the weekend, but I will also extract that and put it back on Thursday because. So tomorrow morning at 10, the Creativity 202 guys are off and running with our next lesson. Because they are the prototype course, they're the first movers on that. I gave them all bar by bar trading course access just because they're willing to take on the risk, and I respect that. So we're in week 3. And if you're in the sound of my voice and still want to join that, there's time. It's a 30-week course, but this is the last week for doing that. So if you want that, I will throw in the bar by bar as a gift, and then off we go. So take good care and see you tomorrow. And then otherwise tomorrow night for more lessons and discussion. And I hear my girls upstairs, so we're going to go do some family time. And we'll see you tomorrow.